Hello, Forexers, and welcome. My name is Steve Nurre. I am the Senior Market Analyst and Forex Instructor for IntroToTrading.com and also for the PitView Education Series. I'd like to welcome you to the PitView Education Series and our first lesson on Introduction to PitView. It's a fantastic tool that I've grown quite fond of, as have a lot of my students and a lot of traders out there in the market. And this first lesson is more about the theory behind PitView. What is PitView? What is this tool that's been talked about so much in the market? I think the best way to start off explaining, the answer to the question, what is PitView, is personally, what advantages does PitView give you when I think about my background as far as being a floor trader go? How does this translate into trading in the pits, hence the name? Well, the first thing we need to think about is what advantages overall does a floor trader that trades in the pit of an exchange have over just the regular retail trader? Well, when explaining what advantages floor traders have, I have 3 bullet points on here. You have the ability to watch the market makers and price action at the point of impact, the point of sale, if you will, that magical place between the bid and ask price that not a lot of retail traders think about. When you're able to, that's why these people spend so much money on buying a seat on the floor, because you're seeing activity live. You're getting to see live sentiment as it occurs in the market. What are the market makers doing? Are they raising the price in which they're willing to buy more than they're lowering the price they're willing to sell? So it gives you that live analysis, if you will, of actual price itself. You get to see moves, and you get to see that sentiment as and sometimes before it occurs. So you get that ability to be able to watch price action not only as it's happening, but in a lot of cases when you're trading on the floor before it even happens. When you see negative downturns in the market, it's generally preceded by an overall shift in sentiment on the floor as far as what's occurring between all the players on the floor. And of course, the ability to follow the big money. This really does come down to liquidity providers and market makers. What are they doing? The people that are actually making the largest amount of volume in the market, that are pushing the largest amount of order flow through, what are they doing? This is a question that's posed to me by a lot of my students, which leads us to our next slide as far as a question from one of my Forex students when it comes to the foreign exchange markets. The question comes about from the fact that the foreign exchange market, the Forex market, if you will, it's the largest market in the history of mankind. The last numbers that we had given to us from the Bank of International Settlements in September of 2013 showed that the average daily volume in the Forex market is well over $5 trillion. That's a lot of donuts. But the thing is, just like this question poses, and I'll read it to you, since there is no centralized trading pit in the Forex, so there's no centralized exchange, is there a way to follow what the major market makers, liquidity providers, are doing in the market? My answer was simple, because when they sent me this question is when I had first gotten introduced to PitView, and I said, yes, PitView. That's what allows us to be able to see what the actual players are doing in the Forex market, because it's a decentralized market. There's no centralized pit. The Forex market is mainly made up of an electronic network that connects various banks, various corporations, central banks into the market where they're exchanging currency back and forth. So when looking at it as far as how it works, we really need to think in a different way than most people. We have to think more like professionals and less like retail traders, because I know some of you out there are probably more used to looking at your charts and your various technical indicators in the market, but many people don't look at their Forex trading platform and actually look at the bid and ask price as being relevant. But if you're a professional, you know that everything is relevant when it comes to that bid and ask price. And let me show you how. Now, we look at the bid. Let's take a look at this. Let me draw my arrow here. We look at the bid as a retail trader, the bid price being the price in which we can currently sell something, and the ask price telling us, the retail trader, where we can currently buy something. In this case, that something is the euro-dollar pair. Now, what's the activity on the other side of that bid and ask? Well, your Forex broker, through the various liquidity providers they deal with, they're disseminating that bid price to you, which is showing you the highest price a liquidity provider is willing to buy, okay? Now, when a liquidity provider raises that bid price, when that bid ticks up, whether it be by just a slight fractional pip, that means that the liquidity provider is raising their bid, and they are leading inside the bid price. So let's say the bid on the euro dollar in this case goes from 1.34889 to, let's say, 1.34890. That means the liquidity provider has raised their bid. They've gone inside that bid in order to buy at a higher price. Now, this is bullish, obviously, because that means that the major liquidity provider is willing to buy at a higher price. Hence, this is the reason why markets go up, based on liquidity providers wanting to buy and buy at higher prices. On the flip side of that coin, we have the ask price. Now, us as the retail public, again, we're used to buying at this price, but what is that price telling us? Well, that price that's getting disseminated to us is telling us the lowest price in which a liquidity provider is willing to sell. Now, in this case, we have the ask price of 1.34915. Now, when that liquidity provider lowers that ask, maybe by just a fractional pip, they are leading inside that ask price. What does that mean to us? Well, that means that this is bearish because they are lowering the price in which they're willing to sell. They're willing to sell at a lower price. This is why markets go down, from supply exceeding demand, people willing to sell at lower prices. So this would be bearish. Now, we can look at charts all we want, but from a retail standpoint, I say on here, most retail traders do not realize that this area between the bid and ask price is where the magic happens in the market. This is the point of impact, where the rubber meets the road. That little space between the bid and ask price, when you're looking at all the various liquidity providers around the world, that is where all the activity happens. That's the point of sale, if you will, in any market. And what PitView does is unlike a chart or a technical indicator, what PitView does is it monitors that activity. And it tells you the activity that's occurring between that bid and ask price, between that magical little area between the bid and ask price, the spread, if you will. So looking at the PitView indicator overall, let me just introduce it to you and show you how it's doing this, how it's helping you at that point of impact. So I have the PitView indicator up here for the euro dollar during the New York session. Now let's go left to right in here, and I'll explain some of these columns to you. The LP ID is liquidity provider ID. The beautiful thing about having this type of information is that we have it. It's information that most people do not have in the Forex market. However, in order to have this information, the banks, various liquidity providers that PitView is tracking, they require anonymity, of course, and this just makes common sense, because in order to show their activity in that bid and ask price, we cannot show who the banks are, and we can't show what their actual prices are. But the important point is there, the most important point, we get to see what their actions are at that point of impact in between that bid and ask price. So all the liquidity providers are assigned an ID because they do require anonymity. The ticks, we have equal ticks, up ticks, and down ticks, essentially. And that just goes back to what I was explaining on that bid and ask price. When somebody raises the bid, that would be an uptick. When a liquidity provider lowers their ask, that would be a down tick. If a liquidity provider does not raise the bid or lower the ask, that would be an equal tick because they haven't changed their prices. And then we have the total percentage, which is telling you who the most active liquidity providers have been for the individual session in which you're looking at. Now, the Forex market is a 24-hour market split into 4 major financial sessions, if you will. At about 5 p.m. Eastern time for me, because I'm on U.S. Eastern time, we have New Zealand and Australia open up. This is called the Sydney session. And then as the markets open and close around the world through the rotation of the globe, at about 8 p.m. I have the Japanese market. That would be the Japanese session, 8 p.m. Eastern time that opens. And then at about 3 a.m. I have all the European and London markets that open. That will be called the London session. And then at 8 a.m. we have the New York session, or the U.S. session as some people might call it. So those 4 individual sessions, of course, you're going to have different liquidity providers, different banks, different major liquidity providers that are flowing in and out of the market because they all have to go home and sleep at some point. So this will track from the beginning of each session who the major players have been, who's been most active at that inside area between the bid and ask price. And they will rank them. And this total down here will always total 100%. So it's showing you, as far as the liquidity providers being tracked, it'll add up to 100%, and it'll break it down of who's been most to least active as far as liquidity providers go. Now, right in here, this is what I love. We have leaders, followers, and total. Remember when I said that when a market maker or liquidity provider raises their bid, they're going inside the bid price? That would be leading inside the bid. So we'll take LP23, our good buddy LP23 here, and we'll say, okay, as far as the overall activity that LP23 has been doing inside that bid and ask price, they have led inside far more than they've let inside the ask, far more than they've let inside by the bid by an imbalance of 14.87, by a margin of 14.87%. So this is showing you as far as their activity, whether they're leading inside the bid or leading inside the ask, of what the imbalance has been. Negative 14.87 is obviously bearish, showing you that they've had much more activity leading inside the ask price, or lowering the price in which they're willing to sell, much more than they've raised the price in which they're willing to buy. So that negative 14.87 would be bearish. Now followers. Followers is still a good indicator of overall sentiment, because let's say I'm a market maker or a liquidity provider. Well, let's say I have a bid out there to buy euro dollar, and another liquidity provider goes inside my bid price. So they lead inside the bid. Well, instead of leading again inside the bid, I might choose to raise my bid price and follow that other liquidity provider to the same price in which they're willing to buy. That would be following inside the bid or ask. This is also a good indicator of overall sentiment. So this shows you when this individual liquidity provider has done that, they have followed inside the ask far more than inside the bid, which is bearish by a margin of 7.67%. And then over here, if you want it all summed up, as far as putting it into like an algorithmic total, if you will, this is an algorithm that shows you as far as total sentiment, what have they done? What is the overall sentiment? Is it more bullish or bearish? So a negative 12.34, and you can see it's slightly red off the heat map, showing you more bearish connotations. They've led inside the ask more than the bid, or had more activity inside the ask more than inside the bid by a margin of 12.34, which is bearish. Now this is showing you from the start of the New York session. I know a lot of you are maybe short-term, medium-term, long-term traders. It doesn't really matter, because all of us have to have a point of impact in which we buy or sell something, and all of us have different time frames that we work off of, or our charts. So this doesn't just show you the activity of these individual market makers or liquidity providers for a certain session. You can also go back a certain time frame to see what the activity has been. So this is showing you the same information over here under leaders, followers, and totals, only instead of showing you from the start of the New York session, it's showing you for the last 5 minutes what the activity has been from this individual liquidity provider. So let's take LP23 for an example. Obviously, for the last 5 minutes, he's led inside the ask much more than he's led inside the bid by a margin of 45.96. Now, as far as following, he's led inside the bid. He's followed inside the bid by just a small amount more than the ask. And then it will give you that algorithmic total. What has been their overall activity? In this case, the overall sentiment for the last 5 minutes is obviously he's had more activity inside the ask, much more than he's been inside the bid. So negative 27.76 is showing you that imbalance for the last 5 minutes. So that's speaking for Mr. LP23 over here. A lot of our PitView traders also like to just track what the overall market has done. You can see here showing you 100% of the action from all liquidity providers. What overall have they done? Well, down here under leaders, followers, and totals, this is showing you the overall sentiment for all the market makers that have had activity from the start of the New York session. So negative 2.09 is showing you more of the total inside the bid and ask, leading inside the bid and ask for all market makers, again with following and also for the totals. And then same thing over here under the 5 minutes. This is showing you for all market makers what the overall sentiment is. This is showing you for all market makers what the overall sentiment has been between leading, following, and that algorithmic total between the bid and ask price. Now, what else does PitView do for you? This is just showing you for the euro dollar as far as what the overall sentiment or overall activity has been inside that bid and ask for the start of the New York session or for the last 5 minutes. And you can change those totals. And these are all things that we'll be talking about a little bit later on in the PitView education series. But I think you're already starting to see why this is such a powerful tool, because you're trading alongside sentiment of the players, the big money in the market. One thing that's also very popular in the Forex markets is what we call comparison analysis. What this means is oftentimes if you're looking for something called the prevailing trend in the Forex markets, let's say you're trading something like the euro-dollar pair. Well, if you're looking for the prevailing trend, because you trade with the trend, because the trend is your friend, let's say, it's not good enough for a lot of Forex traders to just look at the euro-dollar pair. What they would like to see is they want to look at how the euro has been trading against all the other major currencies in the market, and they'll want to look at how the dollar's been trading overall versus all the other currencies in the market. And this is another really cool little tool that it has, because it's going to show you that same total information of, in this case, we have the euro here on top, to where we see how the euro is faring against all the other currencies. And if you look at the totals down here, obviously you've been having more activity lowering the ask, so bearish on the euro versus all the other currencies. And then you have down here on the dollar, when you add up how it's been trading against all the other majors, obviously you have more activity inside the bid. So you have bearish, more bearish activity on the euro, more bullish activity on the dollar. And this is not just for an individual currency, it's for an individual currency versus all the other major currencies that it trades against. To sum it up, essentially when you're looking at the prevailing trend, if you have one currency that's getting overly strong against all the other currencies it trades against, and another currency that's is overly weak against all the other currency it trades against, if you have those paired together, you essentially have the big, strong bully from the schoolyard that can beat up everybody, matched up against the wimpy kid from the schoolyard that gets beat up by everybody. And it can give you a better indication of overall direction because you have a strong currency overall matched up with a weak currency. Any questions on that, don't worry. We're going to go through that in a little bit more detail as we continue on through the education series. But that's a very powerful tool of being able to see what the overall comparison analysis have been, what the overall prevailing trend has been on these individual currencies. We also have PitView depth. Going back to my days on the options floor and working on the options trading desk, we called this level 2. What level 2 was, and it was a big deal when technology first came into the market in the mid to late 90s, where we really had, it's kicked off the retail boom of trading. You had what was called level 2 that get introduced. Now, what was level 2? Well, the same thing as what PitView depth is giving to you, and this is what a lot of retail Forex traders have been asking for, is this yellow portion in here is showing you not only what the best bid and ask are, but it's showing you who the actual liquidity providers are on that best bid, who the liquidity providers are on that best ask, and it's showing you the depth of the market. Obviously, we have 3 various liquidity providers on the best bid price. We have 1 liquidity provider on the best ask. But it also shows you who's behind them, okay? And this can come down to just simple support and resistance as far as, okay, we see who's on the best bid, we see who's on the best ask, but how many liquidity providers are after it? That best bid gets taken off. What is the depth of the market when we go 2, 3, 4 ticks away from that bid price? Where do all the markets and the orders stand behind that best bid? Where do all the orders stand behind that best ask price? So it's showing you the depth of the market. If you see one that has more depth than another, to where you have more closer, let's say, ask action compared to the bid action, there's a lot of people that will look at this from a quantitative standpoint that will just monitor that activity, and it can just really show you an actual picture of where supply and demand exists on an individual currency pair, by not just showing you the best bid and ask, but showing you who's behind them. So another great tool when it comes to PitView, which obviously we'll be discussing a bit further in the education series. Now, as far as my personal viewpoints on PitView, I get asked this a lot from a lot of my students who use this. It all comes down to who do we want to trade with. Retail traders in the Forex, oftentimes what they want, the thing that they ask for the most is, I want to know what the big boys are doing. Because we all know that in a $5 trillion market, that it's the big players, the big banks who control the central banks, all the big liquidity providers that rule the market, that actually determine the direction. Do you want to trade against them, or do we want to trade along with them? And that's what it all boils down to. It's we as speculators and retail traders, we don't determine the overall direction. The big liquidity providers do. And would it help us just a little bit if we knew what activities they were making as far as their overall sentiment? And of course it does. So it helps you trade with the big money. It complements your trading system. We all have different trading systems and trading methods, whether it be short-term, medium-term, long-term that we trade with. The confidence is everything in trading to me. And if not only do you have a good trading system or method that you trade with using, technical analysis or whatever it may be, but it really gives you confidence to take those buy and sell signals on your trading system. If you know that buy and sell signal is being confirmed, we all look for confirmation by also being alongside the overall sentiment of the liquidity providers, of the overall flow of being on the right side of market direction when it comes to price. Not only does it complement your actual entries in your trading system, but it can also allow you to stay in trades for maximum profit. What I mean by this, when I teach my students, I always make them, they're very disciplined, and I want them to have their stop orders set. I want them to have their take profit orders set, because I believe that it's very important in the market to have a stated risk and a stated reward on individual trades. However, and this is something that I've done in my trading using PitView, max profit level, to where I would normally just take it off. But I see that my PitView, let's say I'm long the dollar yen, which happened just the other day, and I see PitView is all green, to where I'm on the right side of the overall, overall action of the overall imbalance between the bid and ask price. If I see it's all green, I might stay in that trade a little bit longer to get more profit until I see the imbalance go against me. And in some cases, it's been good for a nice little extra pip potential, but I'm not just doing it off the fly. I'm using analysis. I'm using an actual tool to tell me, well, when should I can give myself permission to make a little bit more on my pips on this trade, because I'm on the right side of the market right now, and I'm going to wait for the imbalance to turn against me before I take off this trade, which sometimes can help you stay in trades for more profit while still using a systematic approach, if you will, because you are trading alongside the actual trend as it states there. Trend all comes down to price. What are the big boys doing? It's also helped me avoid bad trades. If I'm trading like the London session and I'm waiting for a breakout to occur on, let's say, the euro-dollar pair, and my method gives me a buy signal. However, I see that buy signal is not being confirmed by PitView, to where it's all red on PitView and I'm getting a buy, which it should be green. Well, I've had times where I've just said, you know what, I'm going to stay away from this buy signal, and it helps avoid that whipsaw effect that we all hate, right? You get into a trade, it comes down and stops you out, and it's really helped me avoid a lot of the bad trades in the market, because I haven't had that whipsaw effect, which can be very frustrating, right? So it also helps you avoid bad trades. Yes, we all have methods for entry. However, when that entry is not confirmed by the big boys, by the big liquidity providers, maybe we can exercise some patience and wait for maybe the markets to align a little bit better for us before we enter into that trade. And also, one of the big things from trading on the floor, it can spot directional changes in the market sometimes before they occur, because it's giving you a visual of LP imbalance shifts. What that means is liquidity provider. Whenever I state LP, I mean liquidity providers. This same advantage that floor traders have, because you're looking at the actual sentiment of the market. And a lot of times when you're on the floor of the market, you see the sentiment shift. You see the activity, kind of the buying and selling imbalances on the actual floor in the pit shift, and then you see the overall market direction change. That's one of the same advantages PitView has given me in the past, and it can give you, is the fact that sometimes you'll see a huge imbalance between that bid and ask price start to occur before the actual market changes direction. And this is something that, before it appears on your chart, essentially. Now, along with that, I think that just creates just a very powerful tool when you add all those up. And that's exactly what we all look for as traders, is we look for the best tools available in trading. And that's what I feel that PitView gives you. It's a great complementary tool, no matter what your trading method is, to give you just that added level of confidence in your entries, your exits, and sometimes just staying out of the bad trades, and also giving you kind of that feel of what's going on overall with direction. So I want to thank you for attending this first presentation. PitView is a wonderful tool. I do recommend it to all of my students, and we will be having more upcoming information in the PitView education series, talking about comparison analysis, trading methods, confirmation tools as it can be used. So my name is Steve Nurre once again, and I want to welcome you to shoot me an email if you have any questions. You have my email address right there on your screen. Or for more videos or more information on PitView, you can go to the website, www.pitview.com. I want to thank everybody for attending, and happy trading. Have a great day. Thank you.